This is Gerardo Del Real for the Outsider Club. Joining me today is President and CEO of Skyharbour Resources, Mr. Jordan Trimble. Jordan, how are you this afternoon?
Doing excellent. How you doing?
I'm doing great. Thank you for taking the time. It's a hectic day in the uranium space with headlines that there is the possibility of a probe that may lead to tariffs. In the uranium space, of course, it is a very volatile time geopolitically. Many U.S. producers are up 10, 15, 20%. After market, I do believe that'll extend to the entire sector because it's going to force the hand of utilities sooner rather than later. But let's have that discussion a bit later on. I know you're one of the more insightful people in the space. I want to introduce Skyharbour Resources. It's, of course, a company that I'm a shareholder of, so I'm fully biased here. But I think that Skyharbour has been positioned well by you and your team to be one of those first companies to capture those disproportionate gains that uranium companies capture in a uranium bull market. So I'd love for you to tell us a little bit about your background, Jordan, and what Skyharbour is, and then let's talk about the people you've been able to bring together.
Perfect. Okay, so we started the company back in 2013, so we've been at it for a few years now. Much like yourself, and we've had this discussion many times, we truly believe this is a very unique and unprecedented contrarian opportunity, right? So we went in there back in 2013 and basically started laying the groundwork, building the foundation for a vehicle investors can go to get exposure to a rising tide in the next uranium bull market, but also get exposure to high-grade discovery potential. And those are, I think, two important catalysts to talk about when we talk about Skyharbour. It's an Athabasca Basin uranium exploration and early-stage development company. The assets are in the number 2 mining jurisdiction in the world, which is Saskatchewan, and just so happens to be the highest-grade depository of uranium in the world. This is really, the Saudi Arabia, if you will, of uranium. And we started off acquiring projects, really focusing on getting deals done that were accretive, that were taking advantage of a depressed uranium market, being able to buy these assets at pennies on the dollar. We've now built a portfolio of 5 projects scattered throughout the Athabasca Basin in Saskatchewan, covering almost 500,000 acres of land. They're at various stages of exploration and early stage development. But to give you an idea of valuation and re-rating potential for these projects in this asset base, we spent about $4 million Canadian over the last 5 years to acquire these projects. They've had over $75 million in historical exploration and drilling. And in previous cycles, a couple of these projects have been in companies that have been valued well over $100-200 million valuations in a better uranium market. So it's a great project portfolio. It's taken a number of years to build. I started the company started running the company back in 2013. I teamed up with my head geologist, who's a very important part of our team, a gentleman named Rick Kazmersky, or Radioactive Rick, as he's known. He's found a lot of uranium. He's been at it for over 40 years in the Athabasca Basin, so focused expertise in the basin, finding high-grade uranium deposits. He started his career in the basin with Cameco, the world's largest publicly traded uranium mining company. He was the exploration manager there for several years before starting his own junior company called J&R back in the late 90s, early 2000s, and he made multiple discoveries, had a lot of success with J&R, took it from a $5 million valuation to over $350 million in 2006, 2007, and ultimately sold the company to Denison Mines, and that's when him and I teamed up and started Skyharbour. It's come full circle in a way where our largest strategic shareholder and strategic partner is Denison Mines, the company that Rick sold J&R to back 5-6 years ago. Denison Mines, that's an important part of our story. They're one of the larger uranium development companies in the world. They're listed in New York and on the TSX. And another very important part of our team is Dave Cates, who is a director of Skyharbour and is the president and CEO Denison Mines. My chairman, Jim Pettit, him and I have worked together for many years. Before I started running Skyharbour, Jim and I ran a company called Bayfield Ventures, which was a gold company that we had success making a high-grade gold discovery in Ontario before selling the company to a larger gold mining company called New Gold. And I want to emphasize that point. We are very much focused on making new discoveries with Skyharbour, right? Finding new high-grade uranium deposits, and really our end game, our exit strategy, and what the shareholders can look forward to is, making these discoveries, delineating resources, de-risking projects, and ultimately looking to sell them or to sell the company to a larger company, as is the case with most, junior exploration and mining companies and what they're looking to do. So I think that sums it up. We have a couple of other important members on the board and on our strategic advisory board, including a gentleman named Paul Matizik, who I think you know well and is well known in the industry. Paul's built and sold a handful of mining companies in the last 12 years. His biggest win coming from a uranium company called Energy Metals, which he built and sold in 2007 to Uranium One for $1.8 billion. So he knows a thing or two about building these companies and selling them to larger companies. So that rounds out the team. We have our corporate team here based in Vancouver and our geological team based in Saskatchewan near the project.
Jordan, I'd love to set the table for everybody and provide a little bit more context. You mentioned the success of the team that you've put in place, the multiple success stories of companies they've sold for hundreds of millions of dollars. You mentioned the significant expenditures on the properties that you've been able to roll in under the Skyharbour banner. What's your current market cap right now?
Yeah, our current market cap is about $22-23 million Canadian. So, this just shows you the deep discount right now in this sector that's really been created over, post-Fukushima, right, over the last 7 years as a result of low uranium prices. And as I talked about earlier, given the project base we have, the team that we've assembled, I think there's strong potential for re-rating and to see that valuation increase as we go out and value add the projects through exploration and through partner companies exploring and developing our projects, but also through a rising market, a rising tide in the uranium sector.
Let's talk about the flagship. Can you tell me a bit about your flagship project and the attention it's received and will be receiving this quarter and frankly, the rest of this year?
Yeah, absolutely. So this is really the crown jewel for the company. It's called the Moore Uranium Project. We acquired the project about 2 years ago from Denison Mines. It's a project that's had a lot of historical exploration. In fact, the high-grade uranium that's at the project was discovered by my head geologist, Rick, and his team back in the late 90s. So that was an important part of getting the deal done. Rick and his team really know this project best. They've spent the most time working there. They understand the geology, and they know where the most potential lies. And that's really what we're trying to tap into now that we've essentially brought the project back into the Skyharbour portfolio. It's had over $40 million in historical exploration drilling, a lot of data, a lot of information. There's high-grade mineralization at a zone called the Maverick Zone. It's a 4-kilometer long corridor, prospective corridor. Really only about 2 kilometers of that 4 kilometers has been systematically drilled. It's important to note the mineralization is relatively shallow. So this is important when it comes to actually mining it, looking at the economics. It'll bring your costs down. It also brings, for us, our discovery costs down for each pound in the ground that we're finding, that we're adding to what will ultimately be a resource there. The unconformity, which I won't get too technical here, but something called the unconformity, which is the contact between the overlying sandstone rock and the underlying basement rock. The high-grade uranium that is known there is basically at the unconformity. So this is interesting. We know there's these high-grade, shallow pods of uranium mineralization that we've been drilling into, that we've been expanding, that we've been finding more of along strike on that Maverick corridor. But one of the areas that has not been properly or systematically drilled or tested is below in what's called the basement rock. And this is important for our upcoming drill program starting here in mid-August. We are planning 3,000 meters to more aggressively test the basement rock and the structures below the unconformity that would potentially host the feeder zones for that high-grade mineralization. We found up to 21% U3O8 uranium over 1.5 meters, 6% over 6 meters. That's very high grade, very valuable ore at the unconformity. It's had to come from somewhere, and it's come from these feeder zones in the basement rock. So we are now going out with this drill program and likely future drill programs to test for these higher grade zones. And that's really where we feel there's the potential for a much larger, higher grade deposit to be found. If you look at the recent discoveries in the Athabasca Basin, and again, I like to emphasize this point, you look at the companies like NextGen, like Fission, Denison at the Griffin deposit, right? These recent high-grade discoveries that have created hundreds of millions of dollars in shareholder value were all found in the underlying basement rock, right? And so it's exciting for us with this flagship project that we've recently acquired and really just scratched the surface with our own drilling on to go in with a new look and start testing some of these targets in the basement rock to add to what we know is already there at the unconformity and in the sandstone, the shallow high-grade mineralization that was found historically.
So in baseball terms, Jordan, and you framed it this way before, you've hit lots of singles, some doubles, but you're taking a couple of bigger swings this go around. You're swinging for a home run. Is that accurate?
Yeah, and that's a good way to put it. I mean, we've drilled in the last few programs relatively shallow testing for finding additional high-grade mineralization at the unconformity, those singles or those doubles as you talk about. And I don't want to, take anything away from that. We've had a lot of success doing that, and that's created new value, right? We will be coming out with a maiden resource at some point down the road, and all that drilling that we've done will contribute to that. And we believe there's more to be found along strike at the unconformity, relatively shallow. But yeah, as you point out, we now have an excellent understanding of the geology. We've done some deeper geophysics to look for some deeper targets in the basement rock. We've done some exploratory drilling into the basement rock as well, finding the right kind of alteration and indicators that give us, the thumbs up to go and be a little more aggressive now with the drilling, testing some of these deeper targets. So this will be very much the first drill program that we carry out that is, call it that, home run swing. We're confident that we'll find something down there. You can never guarantee exploration or discovery success, but I think we're at a stage now where we definitely have the most confidence in drilling deeper and allocating most of the budget into these basement holes.
Well, and again, just for a bit of context, your neighbors that you mentioned, NextGen and Fission, much more advanced, obviously, but they've been successful with those home run swings. And I think NextGen's market cap's approaching $1 billion, and Fission's, if I'm not mistaken, is right around $350 million. Again, just a brief reminder, Skyharbour's at $22 million or something along those lines. So it's the reward is definitely worth the risk of raising the capital, spending the money, and taking the swing and seeing what's down there.
Yeah, absolutely. And, further to our general strategy, our exploration strategy, and our general corporate strategy as an exploration company, that's what we do. We go out and we find those new high-grade deposits, and like a NextGen has, like a Fission has, like Denison, like Hathor, which was acquired by Rio Tinto. We'd like to be the next big discovery story in the Athabasca Basin. But unique to Skyharbour, we do employ, as a secondary strategy to that high-grade exploration, we do employ what's called the prospect generator model. And you talked about this at length in the past as well. And what we do here is we have a big portfolio of projects. We only have, so much money to go out and systematically explore and drill these projects. We don't want to go and have to dilute at these prices, raise significant amounts, tens of millions of dollars to properly go and explore these other properties. So what we do is we bring in partners, strategic partners, to come in and essentially fund the exploration and development at these secondary projects. And in return, they earn in a majority interest. But to get that majority interest, they have to fund the exploration for a certain period of time, and we typically get cash and stock payments on an annual basis from them as well. So again, we can then use those payments to pay for the exploration and our main focus at our flagship Moore project without more equity dilution. So we've done 2 deals in the last year and a half, one of which with a strategic partner in Orono, used to be called Areva, which is France's largest uranium mining company, big company based in Paris. They've come in on an option agreement we signed with them just over a year ago on our Preston project, which is in the vicinity of Fission and NextGen in the western side of the basin. And for them to earn up to 70%, they have to spend $8 million over a 6-year period. They've just finished their first drill program, results to come out on that, and planning future exploration programs there over the next several of years. We then did a deal with a company called Azincourt, similar deal whereby they can earn in 70% by funding the exploration and paying us some cash and stock as well. So it complements our main focus at Moore. It makes sure that these other projects are being advanced, that we are seeing value created, shareholder value created in them through the exploration that's being funded by these other companies, and we retain a minority interest at the end of the day, assuming they earn in, but we benefit from the news flow. It generates more news flow for us and more catalysts for the shareholders.
So more shots on goal with other people's money, basically.
Exactly.
Excellent. How's the share structure, Jordan?
It's good. We've managed to keep it well structured. 55 million shares issued and outstanding. I think that's it's worth noting some of the larger shareholders. As I mentioned earlier, our largest strategic shareholder is Denison Mines at about 10%. Dave Cates, as I mentioned, who runs Denison Mines, is on our board. We have some other funds and institutional investors that have taken positions in the last few years. One of which, Marin Katuza, the KCR Fund, been a cornerstone investor really since day one. A few others, KS Investment out of Shenzhen, OTP Bank out of Hungary is a large shareholder. So there's been more institutional interest in the last year and a half, 2 years. I think seeing what we're talking about in the broader uranium market, as well as liking what we offer on a company specific basis, and so, it's not just about the team, the management and the geological team. It's about, the long-term shareholders that understand what we're trying to accomplish and understand the value and investment proposition that we offer.
Perfect. Now, before I let you go, Jordan, I have to get your take on the overall uranium space, the multiple catalysts that you see on the horizon, and what we really need to happen before we can truly say that we are in an all-out, full-blown uranium bull market, one that I think is on the way, and I think we're frankly at the early stages of. But I'd love to get your take.
Yeah, no, we could sit here for hours talking about it, but I'll be as succinct as possible. We all know that the current spot price at $23, $24 a pound is unsustainably low. It's well below the average global cost of production. Mines producing today, which is about $41, $42 a pound, and well under the price needed to incentivize any new meaningful production to come online at current development projects. That price around $55 to $60 a pound, so almost triple from where it is currently in the spot market, is the average analyst projected or forecasted price, long-term price for the commodity. And as we saw back 10 years ago, 2006, 2007, we saw the price spike up to over $135 a pound. Now, will we see that again? I don't know, but I can tell you on no uncertain terms that the current price is way too low. And we are now, and it's one thing for the price to be low. It's another thing to finally start seeing some catalysts that could turn the market around, right? That can change that. And we've in particular in the last 3 or 4 months, there's been some notable headlines and positive developments. We've seen a lot of production cuts over the last year and a half between the largest producer globally, which is Kazatomprom out of Kazakhstan. If you think about that, Kazakhstan produces over 40% of global primary mine supply of uranium. I mean, if you compare that to oil, for example, it's Saudi Arabia plus the U.S. Plus other larger producers. So over 40% comes from Kazakhstan alone, Kazatomprom being the state-run uranium mining company there. They've announced major production cuts. And it's not just production cuts at mines that have been operating for a long period of time. These are mines that came into production about 10, 12 years ago. They're ISR. There's talk about declining production rates potentially at this point, but these are some of the lowest cost producing mines in the world. So these aren't mines that are shutting down that are high cost that are low grade. These are some of the best lowest cost mines in the world that are curtailing production. So we've seen Kazakhstan announce major cuts and actually just recently announced more. So we now move on to Cameco, the world's largest publicly traded uranium company based here in Canada. They shut down back in February the world's largest and highest grade uranium mine in McArthur River. Again, I emphasize these are low cost mines. These are not at the high end of the cost curve, right? So here we have the bottom quartile of the cost curve that's shutting down. So when we see that happening, coupled with existing mines, operating mines that are simply running out of reserves and resources, and other mines that are still producing, but the producer is able to sell into a long-term contract at a much higher price, because a lot of uranium is traded on these long-term contracts, which were priced at much higher prices back in the last bull market. As those contracts roll off, they don't have that price protection. They too will be forced to shut down. So to put some numbers on that, the annual demand projected for 2018 will be over 190 million pounds in the global nuclear reactor fleet. We are now going to be producing less than 135 million pounds of uranium, down from about 165 million pounds a couple of years ago. So that is a massive cut, and I think you will see more cuts coming. When you look at the demand side, demand has been growing steadily. Most notably in the last, call it 12 months, we've seen an acceleration of the Japanese restarts, and that's a big point. Post-Fukushima, it took them about 5.5, 6 years to restart the first 3 reactors, and just in the last year, we've seen another 6 reactors come back online for a total of 9 reactors. So we are seeing Japan coming back online, but the big growth in demand, the real narrative revolves around China and India and other parts of the developing world. They're really leading the charge on these new reactor builds. And as we see more and more reactors come on and new Gen 3 reactors, which consume and require more uranium on an annual basis, we'll see that demand continue to grow as we see the supply side continue to diminish. And, as the supply side continues to wane with these production cuts, curtailments, and, mines that are simply running out of reserves and resources, there's going to be a supply crunch that will drive higher prices. And as I pointed to earlier, talking about higher prices, I'm not talking 10 or 20%. I see a significant move to get that price back up to some normal range, right? And so that's what we saw happening a couple of years back when we started the company. We wanted to basically build the asset base, put the team together, have everything ready for that next bull run in uranium. And I think now, given these recent developments, whether it's on the supply side with the production cuts, the demand side growing, the Japanese restarts, and now also we've seen some big money come into the space in some new funds that are buying physical material, yellowcake out of London. UPC has continued to raise money. So that's money coming in that's betting directly on the commodity price itself, and also taking a lot of material out of the market that otherwise would be selling pressure, especially on the spot market, which is a relatively small market historically compared to the contract market. So buying those pounds, in the case of yellowcake, over 8.1 million pounds directly from the Kazakh, that's well over 20% or 25% of the spot market that's essentially been accounted for in 2018, and they will likely be buying more in the years to come. So that can only be positive for the spot price going forward. And in a rising spot price, when you look at, how do you get exposure to that? Well, the mining companies, and in particular the junior miners, offer the most leverage and torque traditionally and historically speaking.
Well, it's a fascinating time, Jordan, a very insightful discussion. I want to thank you so much for your time, and I'm looking forward to having you back on. Is there anything else that you'd like to share before we wrap this up here?
No, I think that covers it all. We've covered a lot. I'll just finish by saying, really our focus is trying to be as aggressive as we can be within means going into this next uranium bull market. We're one of only a few companies that have really survived the last 5 or 6 years of a depressed uranium market. This is not like other metals or other commodities where there's hundreds of companies to choose from, ETFs, buying physical. When you're looking at getting or having some investment exposure to uranium and to the sector, you have very few options to choose from, right? And so that will you will see that pay dividends in a rising market as capital comes back into the space. I think it's important to highlight the fact that all the combined publicly traded uranium mining companies, keep in mind that nuclear power accounts for 11% of global electricity generation. So a significant amount of electricity generated globally is from nuclear. It's 20% in the U.S., and in some places like France, it's over 70%. And the companies that mine the fuel for that electricity generation, the total combined market cap of the publicly traded companies is less than $15 billion. So we've seen in the past that number well over 100+ million. And I think with a rising tide and an improving uranium market, we will see this re-rating amongst all the uranium mining companies.
Well, I've said it before, if you're not positioned, get positioned now. It's one of the most no-brainer scenarios I've seen in my trading and speculating career. Jordan, thank you so much for your time today.
Thank you.